We talked about the appropriation being the technical term that we use to indicate the legal spending limit. In other words, unless you appropriate something, you can't spend it. And so the level at which we incur and encumber an obligation, we commit to an obligation in excess of any amount that we provided would be technically an illegal act. And people have gotten into some trouble on this. I've seen several people with indictments simply because they did not exercise their encumbering technical requirements, where they basically appropriated something but then turned around and encumbered something that was in excess of that appropriation. And so again, be very careful that we don't encumber more than what we have appropriated for a particular legal level of control, whether that be at the total department level or at the individual subcategory level or at the individual line item level, hopefully not. So this again can be different from the legal level of detail presented within the budget document. For example, we saw all those line items on the previous slide. That doesn't mean that's where I'm controlling it. The control is set by state law at a minimum at that department level. So, that's where we have to control it, is at the total department level at a minimum, unless we choose to control it at a different level. There's also a legal level of appropriation on what we call an alternative purpose-based approach budget, but there's only one community that I know in the state of Oklahoma that uses this alternative purpose-based budget approach. So I'm not really going to cover this. It's basically one giant budget that crosses funds, where you put all 17 pockets into one budget instead of having 17 different budgets. But it's very complicated and requires some forethought when going through it. So anyway, I just wanted to mention that it was there, but even though no one really follows those. As I mentioned earlier, we adopt the budget by resolution. The budget under Municipal Budget Act must be adopted by resolution, and that resolution should include the dollar amounts for the appropriations at the legal level of control for each fund. And the resolution should also define the budget amendment policy and authority. Who's got the ability to amend the budget? Are we going to give the manager the budget authority to move from department to department, or are we only going to give the manager the ability to move within the department's line items? So we can establish that by authority. The only thing we can't establish is that all supplements have to go to the governing body. If you're doing that old estimate of needs law, here are the various forms on the state auditor's website that you would have to do. We mentioned the cash appropriations form for all those little funds, the long form and short funds, a short form of the estimate of needs for less than 1,000 people. Again, I don't think this is done very much anymore, so most everybody else is on the Municipal Budget Act. So last, we'll end with this, and I kind of already started this process, budget balancing. How are Oklahoma municipal budgets usually being balanced? Well, basically, based on a sample of 6 governments that I just randomly picked from last year, it appears that we're balancing the general fund budget with about 82% of current year revenues and about 13% of transfers from a utility fund, i.e. a subsidy or a cost reimbursement or a payment in lieu of tax. They're all use different names, but 13% tend to come from the utility authority. Some governments are using loan proceeds to balance their budget, which is not a great idea. You don't want to borrow money long term to pay for short-term costs. And then a lot of governments use fund balance carryover, but only for about 3% of that money. So this may or may not be statistically correct. I just randomly picked 6 governments to kind of measure how it looked. But that's pretty much how we do it. Most of it's from current year revenue, and then we get money from other places, the utility authority and fund balance in most cases. When we transfer utility revenues, remember that probably means we have higher utility rates because the customers are not only paying for utilities, but they're also funding town operations or city operations. And maybe they're deferring needed maintenance on utility infrastructure, which means that when the utility needs work, they have to go borrow money, and then they have to raise rates again just to pay the debt service on those loans. So borrowing by using loan proceeds means we are shifting the burden to future taxpayers and reducing the revenues available for operating purposes in future year's budget, because we're going to be using chunks of that future year's budget to pay debt service for stuff that we're doing now. And then, of course, depleting fund balance means we're going to run out of that at some point if we keep dipping into our fund balance or our reserves and carryovers. That means that ultimately those are going to run out, and we're going to be left on with a big problem in the future. And also relying on one-time non-recurring resources like loan monies is not great for potential recurring costs. So borrowing and depleting fund balance and transferring utility revenues into the town or the city all have consequences at some point that you don't want to have to face all at one time. So you have to draft out something that's much more sustainable over a prolonged period of time and factor in these things as we go along. Again, already showed that. Oh, sorry, went backwards. Maintaining fund balance reserves, we kind of already talked about this. Suggested minimum is about 10% of annual revenues or appropriations, which is implied in the state budget laws. You know, maybe my 30 to 50% is a little high, but I'm telling you, I've seen 10% get wiped out in one day. And so we need these reserves because it's a prudent fiscal management plan that says we're going to need cash flow. We know we're going to have some emergencies like an ice storm, and we know on occasion revenue doesn't come in like we thought it did. But we have to be ready for that. And that's why we want to keep that fund balance reserve. And so we don't want to use fund balance to pay for one-time or to pay for recurring costs. So with that, gosh, I can't believe it. I made it. It's 9:50. So I don't know if I left a whole lot of time for questions, but I'll be happy to take any that anybody has.
I think we have a couple of minutes we could take for questions.
Okay,
Cheryl,
sure.
unmuting everyone. If you want to just jump in and ask a question, you can, or if you'd rather put one in the question box. I don't see any on my end. Cheryl, do you see any?
I do not. I see a couple of raised hands. Oh, yes. Patrick, go ahead.
Hi, this is Patrick Bolden in Tulsa. And I had a question about multi-year appropriations. Maybe related, dealing with programming monies that aren't currently available that are expected in future years, and how to, if you have any suggestions or advice on how to address that. It seems to be a policy issue, more of what's most important as far as projects, multiple projects, and allocating funds. But I talk too much. Do you have
No,
an
you're
answer?
fine. You're fine. You know, there is the provisions within the Municipal Budget Act that basically says if you've got grant or loan funds that you're basically doing a project with, and that project's going to take over multiple years, that you have the ability to adopt a multi-year program budget for that process. Now, if you're just constructing stuff out of cash that you've got, you know, that you've already collected cash and it's not a grant or a loan, or you're anticipating collecting future revenues that are not grants or loans, you can go ahead and project out a multi-year program budget where you program out not only the expenditures of the program, but estimate the revenues for that program also, even if those revenues are future year revenues. In other words, I can adopt a $100 million capital project budget, knowing that I'm going to go seek loan funds or grant funds that will add up to $100 million in those years of the future. So I still balance that budget with $100 million of proceeds of loans or grants or revenue and $100 million of expense for that program. And then that way you don't have to chop it up into several individual years. So that'd be one way to do it. So hopefully that answers your question. But yeah, I think you're right. I think it is a policy decision that you would want to amend or adjust your budget policy to reflect that that's how you're going to do those large capital projects that extend out over multiple periods or multiple years.
It would seem to be very difficult if you're trying to estimate multiple years. It's a swag.
Yeah, it is, and that's the beauty of this thing. Is that's all this is a guess. It's an educated guess, and that's why once we adopt it, we're allowed to amend it as many times as we want throughout the year. because they know it's a guess and it's just a plan, and like any plan, it can't predict everything exactly. So yeah, I think you can do that, and then you can just amend it as you see fit.